We found over 580 new insider trades in the last week. Almost every single one is totally useless, but some of them are going to be high signal and can help us make some money. Let's take a look. So in the last week, as we mentioned, about 587 or so insider trades came in. Taking a look, right about a very average week in terms of the percent of insider trades that were buys, about as average of a week as you can get. We did have a few days, as you can see here, where we kind of shot up above that median line and we had more buyers than normal. However, overall, pretty average week, and frankly we're getting close to earnings season now, so we're going to see overall we'll see trades start to come down a little bit in the number of trades, and we're going to see more selling than normal because you can't really make discretionary buys right before your earnings, or else you might get charged for insider trading. Overall, the quarter came to an end as well. As we can see, last quarter we came in really low in terms of the percent of trades that were insider buys in the last quarter. However, you'll notice there's quite a few different quarters that come in at or below this number. It's actually a pretty common number, pretty common value that we had right here. There's just, we had a handful of big spikes, which are what you really want to look for, at the end of 2018 and COVID. You want to see those huge insider buying spikes. That's very bullish, but for the most part, we're going to be down here at or below the median line, so nothing too unusual there. As a reminder, we're going to look through, like we said, we have over 580 insider trades, but we need to look for those unscheduled and unusual insider trades. If the insiders have a history of success, i.e. they buy before the stock goes up, that's a big bonus. And then if you got multiple insiders buying, that's also a big win as well. So let's go to CEOWatcher.com. We can look at the last 7 days. We'll start with bullish only and take a look at the purchases first, and we'll see how many we got. 116 that came in last week, so pretty low number, but there's still some for us to look in. I apparently did not sort by transaction value. We'll sort by transaction value. Take a look here. Up at the very top, we're going to see these are mostly going to be public offerings or private placements. Some of them, like the Transocean ones, it'll tell us it's a public offering with a flag here. Some of them, like this Pepgen one, for whatever reason, I don't know why they don't mention down here in the footnotes anywhere. They don't mention that this is for a public offering anywhere, but you can kind of look at the stock price. They had this big spike after some good trial results, and then they announced a $100 million public offering, and then you got the big 10% owners buying the stock. Definitely part of the public offering there, so not much for us to do there. This one, Falcons Beyond, I don't actually quite remember what we have going on here. Let's see if they also raised. So it looks like they didn't actually raise money. See how long they've been out. They've been out for a while, so let's take a look and see if maybe this will tell us what's going on here. If we take a look at the insider trade, okay, so yeah, I do remember this one now. They're not actually buying common stock. They're buying some sort of Series B convertible preferred stock, which, there's very specific terms. Let's go take a look actually what the stock's up at 1180 or whatever the stock price is. They're getting this stock, they're buying this for $5 a share. Obviously, it's not common stock, so there's other stuff going on here, but not really what we're looking for here. You'd really have to dive in to figure out what this equity is that they're getting and how exactly it's working and what the arrangement is and all that stuff. And it just gets too complicated to really, for the sake of this, for trying to find high signal insider trades, that particular type of transaction is not going to be very high signal. Take a look at MBX down here. We've got somebody buying. So if we take a look, do we have more buying, or is it just this one guy? So it looks like just this one person buying $12 million, which is almost certainly going to be part of a public offering as well. $18. Definitely a public offering, which it'll probably tell us here. Let's see. Announces pricing of upsized public offering. Again, I don't know why they didn't put it in the footnotes. Normally that save us a little bit of time if they put it in the footnotes, but they didn't here. Now, next decade, our first interesting one, which we've talked about quite a few times and is certainly an interesting insider buying because, as we can see, we've got a big dip here, about a 30% dip, and then all these insiders kind of stepping in to buy. Obviously, it's flattened out a little bit, but hasn't gone up. If anything, it's probably still slightly down from these purchases, but this all comes from, if we look down here, they greenlit their new Train 4 at the Rio Grande LNG project, and then they got downgraded by a handful of analysts downgraded them. TD Cowen downgrades to hold from buy. Morgan Stanley downgrades, and basically all of these downgrades were specifically about when this financing came through, and they agreed on financing for that Train 4 project for they're a big LNG property developer, facility developer, whatever you want to call it. And when that funding came through, the analysts basically said, we think management's being a little too aggressive here, or a little too optimistic, and we think that their cash flow numbers are going to come in a little bit lower. We think spot margins are going to be a little lower, which is why the cash flow will be a little lower. And so because of that, they downgraded them, and then the stock got hammered from about $11 down to, in this $6 range. And then obviously which actually they're now below, at least I think maybe one of these guys downgraded them to 10, but you can see they like TD Cowen only brought them down to 8, and they're obviously well below 8 right now. So let me see if I can see exactly what it was. Yeah, basically analysts are citing lower cash flow expectations due to lower spot margins, or at least in part due to lower spot margins. So, and then you can see, kind of we got a 1-year EPS came down quite a bit, which is all related to why the stock came down. But now the market has fully agreed or integrated the news from those analysts. And so we're now we're trading well below where TD Cowen is. And then you got the insiders all stepping in and basically saying, hey, I think you guys are overreacting here, which is exactly what we'd like to call this type of buy. You've got the big short-term step down, and then insiders buying in is like an overreaction buy, which is one of the stronger signals kind of long-term in the market, is when you have an executive stepping in to pick up the stock at relatively low prices. We saw it recently with Shift 4, their CEO stepped in with $15 million, which, we'll see how that goes in. Yet not quite the same, but at Marvel, we had the CEO there stepped in and bought, and then Marvel also held a whole phone conference to a whole special call to literally just say, hey, our stock is undervalued. You guys are concerned about revenues and stuff when you shouldn't be. Let's take a look at next decade's valuation. So they don't have, they're still early in the development, so they don't really have much valuation stuff for us to look at here. So overall though, like we mentioned, big overreaction here. Insiders stepping in to buy up the overreaction. Looks like the market has basically fully absorbed the downgrades from the analysts, and now one would argue that the insiders are probably painting a much more rosy picture here, which pretty high quality and high conviction insider purchases there for sure. One of the better setups you'll see. We got Pattern Group. Let's see what's going on here. Brand new company, fresh off the IPO. These are just too hard. There's already enough insider trades to try to go through. Trying to time these like post IPO 10% owner buying the stock is just too hard and not worth our time. Prospect Capital Corp. This is another one. He's actually been buying for a little bit. Buying up a bunch. There's two things here. So one, overall, I just don't really like these kind of income plays or these capital market plays. They're outside of my wheelhouse a little bit. And then also just, not in this case because this stock's being crushed, but a lot of times these more dividend focused plays are not very volatile. And when you're trying to take advantage of some insider info, these insider purchases, you'd actually want more volatility so that you can hopefully be on the right side of it. And lastly, as you can see, this dude just sucks at buying his own stock. He bought a bunch here, stock went down. Bought a bunch here, stock went down. So there's just nothing about this that I like. I tend to stay away from like REITs and any of the sort of capital market stuff. And then on top of that, this dude is a terrible buyer of his own stock. Now, Open Door, everybody, obviously a big old meme stock that's on a roll. But here, this trade, again, we've talked about this one before too. If you can get them to give you a purchase agreement where you're allowed to buy the stock at $6.65 while the stock is trading at, $8, so a nice little 15% discount or whatever that would be, then sure, you should buy. You should always take that deal. Unfortunately, Open Door is not giving you that deal. So I don't think this is, Open Door might work out, but this I don't think is a very high signal insider trade. We got John Barry again here. We've got a couple, we will have a couple more, but you've got more buying here. This is one, look, if the capital markets are kind of something that you are interested in, there's a ton of buying down here by a few different insiders. Again, these insiders kind of suck at timing their previous purchases. They're all just so terrible, but group buying after a big dip like this, if you can go read some of their transcripts and they have a compelling story for why a turnaround is going to happen now, that can be very high signal. The group buying, the big dip, and then a strong rationale and reason from the management team on their press releases or earnings calls for why the company is going to turn around. That's a great reason and a great setup to buy. I just hate these capital markets, and these insiders are so bad at timing their stock that I just don't like. Here we've got another recent, not an IPO, I guess, but I believe they must have got uplisted or something, because as you can see, just not much news from them no news since 2024. So if we go look at the stock overall, that's not actually what I care about. Let's look at the news. You can see no news minus the insider trades they tell you about, but then March and then all the way back to 2024. no news, no press releases except for all the way back to 2024, no transcripts, like except for once a year it looks like in May. There's just not enough info there for me to build a story of like why are insiders buying this stock now. The only thing that makes this stock semi-interesting would be, again, there's 3 insiders buying the stock. Insiders here also similarly not very good at timing their purchases, but as you can see, or at least over the last like year or so, or 6 months I guess, but as you can see from the green line here, this is their second biggest purchasing amount since back here in Q2, where 6 different insiders bought $2 million worth. So right now we're at 3 different insiders buying $1.64 million worth. So pretty big purchase, and last time they did that, the stock did go up quite a bit, went from 7 to 10, so it was up 40% or something. So I just can't really figure out, at least in the time I've been looking at it so far, they haven't released, there's no info about them anywhere. They haven't released anything, so I don't have a good story for why the stock is down and why it might be turning around. So if you're able to figure that out, then this could be a pretty strong setup, but there's just not enough info for me there. This is a trade I like quite a bit, and this one is an interesting one because this is almost solely just based on the insider purchase. So you're not going to really get much of a story from these guys either, because if we go look at Marpai, it's a tiny little $25 million market cap company. Somewhere it'll tell us $25 million market cap company. It's already up 180%, so up quite a bit. No earnings or anything, so you're not going to really get any info there. I don't remember transcript wise. They did do a call back here in August. See if they tell us anything about that. Revenue going down due to exiting unprofitable contracts, expected to stabilize. Operating expenses were reduced significantly. Loss per share improved. Sales pipeline remained strong. Elevated client turnover, but that's related to the revenue thing where they're trying to shed lower margin contracts. So you can actually start to see, kind of put together a story here, at least where they're executing a strategic initiative. So these are things you do actually like to see. For companies going through a turnaround, which they're already up 180%, so I don't really know how much of a turnaround they're going through. It looks like they're basically flat in the last year. But they are trying to reinvent themselves, and when if they were actually going through a turnaround, or if some of those other stocks we looked at where they're down 30% in the last year or whatever, you would want to see some of these things. You'd want to see like cost reduction, or you'd want to see a one-off revenue decline that is going to get fixed, which here they're exiting unprofitable contracts, they're cutting costs. They are going through a strategic, wherever I saw that before, where did they say? Strategic shift. They're executing a strategic initiative to right size by exiting the unprofitable legacy contracts, cost containment products, launching a new thing, leaders transitioning, a new technology focus, and maybe a new CEO. I don't know if he's actually new. We'd have to go look to see when that stuff came out, but no Q&A questions, which, is kind of good. No analyst coverage. It could always mean you're finding kind of a hidden gem here. Guidance and outlook. Expected profitable quarter in Q1, expected to stabilize right sizing. So in this case, there is actually a pretty decent story here. You've also got the quarter since, if we look here, press releases, this will be easier if we just look in filings, financials 10Q September 30th, 2024, meaning we are now, at the end of October, meaning that the quarter is over, for at least the numbers are in. Like they should know all their numbers for last quarter and how they performed, and then they'll do earnings in 5 weeks from now. But the CEO is buying a bunch of the stock knowing what the numbers are already before the earnings call comes out. Plus you have all this talk about like strategic initiatives and how they're going to fix their revenue, and obviously any good news that comes out about those things, the revenue right sizing, the strategic progress on the strategic initiatives, which really would probably come through with revenue going in the right direction, or at least them guiding to better revenue in the future. All of that's going to be a big boon for them if that happens next earnings. And then on top of all that, you've got this guy, the CEO here, buying the stock, who historically, not the world's greatest timing, though some of these are pretty good. This one's timed well. This one obviously nailed the dip down here. This one worked out okay. Kind of hit or miss, which we'd probably see. Yeah, so if we look through these, longer term, not very good returns. So we'd probably say not a very high signal buyer. The thing that catches your eye though is the size of the purchases as well. The fact that we have earnings coming up, you can see in 9/3/2024, where was this? Right here. You can see he bought stock right around this time too. It looks like he bought 650K, and this was right before, and then here's where earnings came out, right? Somewhere in this region, earnings would have come out, and the stock went up, it doubled or whatever. Yeah, it doubled from that period. So we're in a pretty similar time frame here. We have a history of him doing this one time before, and then just buying $1 million of the stock when the stock is only worth $25 million. I mean, look at $14,000 or 14,000 share volume in this dude is buying days and days worth of volume. So I mean, obviously today's not. This number will probably go up a little bit today, but still he's buying many days worth of volume all by himself. That's just huge buying in a stock of this size. So you got huge buying, not the greatest returns for the insider, though he did make a similar purchase back in September before. And then you've got this story of them, revenue going way down, but then them believing that they're going to it's just because they're shedding all their low value contracts and they're going to be focusing on higher value ones going forward. And all of that kind of sets up a pretty interesting story. And then at the small market cap that it has, obviously that thing's going to fly if next earnings report comes out and looks pretty good. So I think that's another pretty good bet. This one, this is going to be at PepGen, same as it was up here, going to be part of a public offering. Another one that's pretty interesting here is this United States Antimony Corp, which is up like 1,000,000,000%, I believe, even more than Marpai. Let's see here. Yeah, almost 1,000%, up almost 1,000%, just basically going straight up in the right direction. But as you can see, there's nothing here that's going to hint at a slowdown, basically. If we look at the news here, we've got United States Antimony gets $10 million delivery order. They get $245 million defense contract. They obtain 245. I believe in one of these they said something useful too. They announced they're going to get revenue of $100 million in 2026, because in this press release, I believe they said, let's see, he further commented on expansion. When the decision was made to significantly expand, I was asked to spearhead the effort, blah, blah, blah. And they're not really telling you much there. And that's not really telling me what I was hoping it would. Here we go. So they're talking about, as they mentioned, the gross revenue of next year being $100 million, but they're looking like they're going to double revenue for the next year. So obviously they don't, and they say this is the first of many purchase orders, anticipated from the DoD for strategic materials. I also think they tell you, let's see. So United States Antimony Corporation is operating North America's only 2 antimony smelters, which have been processing antimony for decades, and it received the first delivery order as part of an indefinite delivery, indefinite quantity, sole source contract with the U.S. Defense Logistics. So you've got government contracts coming in. You've got them estimating like, hey, we are going to continue speeding up the amount of revenue we're making. They say this is the first of many purchase, delivery, whatever they called it, delivery orders. This is the first of many delivery orders for the DoD. The DoD is clearly going to continue to spend a bunch of money under Trump administration, which is a positive for them. You've got huge revenue coming in. All of this, huge revenue growth on the way. I would just expect, there's no reason really to expect this to slow down at any point. Obviously, the main concern is that this stock is up 1,000% and probably getting pretty pricey, but momentum can continue for quite a long time, and they're going to continue having these good news roll in and contracts roll in, which will always just continue to provide catalysts for the stock to continue. And then on top of all that, you've got the CEO here buying $600,000 of the stock, his largest purchase ever. His largest purchase ever by quite a bit. And as we can see, he also bought the stock back here in December when the stock was already up over, about 100%, bought the stock, and now he's up $1.50 to $7.50, whatever that is, 5x or something, 4x. The stock obviously on a tear since then. Now he's buying more, and stock's already up a little bit since he bought $6.20 to $7.50. I don't know. I mean, at some point this thing's probably gonna have to slow down, but doesn't look like that's happening anytime soon. One more purchase that's kind of interesting. Well, you can see down here the Marpai guy buying again. Ambac Financial, which we talked about a little bit this week as well, is pretty interesting because the CEO just keeps buying all of these dips. Anytime there's a short-term dip, he likes to buy it. They're going through a turnaround as well. Just gonna look. They're doing a transformation. Insurance company doing a transformation into a pure play specialty insurance platform. They sold off one of their legacy financial guarantee businesses. They acquired a leading supplemental health program manager, which they believe they'll be able to cut some costs, some board costs there, and that's expected to give them some positive EBITDA in by 2026. Next year that'll start to account for them. They have a huge 5-year EBITDA goal or 3-year EBITDA goal. By 2028, they want to be the $80 to $90 million EBITDA, which would probably correlate with a 3x stock price increase if they're able to get there. Obviously, you can go watch that video to get the full story, but that's a pretty good turnaround play. That's pretty interesting. Cooper Companies, this is another one, a pretty interesting turnaround play that we won't get into right now. But you can see a handful of the insiders buying here, trading at pretty low valuations. The insiders have historically timed their sells pretty well, and now they're stepping in to buy, which also historically they have timed pretty well. So you can see down here they bought the stock, and you can see down here they bought the stock. Big ol' increases after those buys. So here they are again, kind of calling the bottom at pretty similar prices, which they didn't all buy right here, but this is was also the bottom. So they're basically calling the bottom there again at the Cooper companies. We talked about that one in more detail in another video too. That one's pretty interesting. And then one of my current personal themes that I have, a sleeve of my portfolio betting on essentially are these crypto reserve treasury companies that are total garbage companies. They're not real. They solely exist to pump the stock price. But frankly, if I'm just making a trade, then all I really care about is you pumping the stock price. So that's actually kind of fine with me. And we're still in such a crazy market that occasionally they'll put out some press releases that can get the stock to just go flying. And if that's the case, I want to participate. So, which interesting, the news just didn't really pick up for, as you can see, we look at the news, there's no real news about it, but there's a press release that came out where basically they were announcing the company is going to stake their ton reserves, and they turned on a $250 million share repurchase program. So literally all this company is doing is staking ton, taking the interest they earn from that and buying back its stock. And I'm sure they're going to continue to try to pump the stock with other press releases and stuff. And so as you can see, when they announced initially their crypto treasury, the stock popped, 4x, almost 3x, I guess. Popped 3x, has fully given it all back. This is solely a play on like, hey, hopefully these insiders try to pump this and we can get another, 200% increase here that will then sell out of. But that is kind of the play here. And you've got the insider buying, which we saw, Tonex, where are you at? Which we saw here with the chairman, I believe, buying $500,000 of the stock, or just a director, but I'm pretty sure he's the chairman. This will tell us if he's the chairman. Serves as the chairman, the issuer's board, or the issuer's chairman of its board of directors. So quite a few interesting insider purchases actually this week, and they get even a little more interesting because we do have earnings, right on the horizon. So let's go take a look at some sales here. The sales this week are not the most interesting in my opinion. A ton of tax selling going on, a ton of 10b5-1, which we always have a bunch of 10b5-1s. We got a bunch of big ones here. We got like Magnetar Financial selling the CoreWeave post IPO, which they've been just selling kind of nonstop. They still have quite a few shares too, so we'll see how much they continue to sell, but they've been selling that stock for quite a while. Lilly Endowment has been selling some Eli Lilly stock. Not sure what they're raising money for there, but not super high signal at all. We have Fluor Corp, which this is an interesting one, and you're actually going to see this just kind of across energy companies specifically, which let me actually see. If we did an energy and utility, I'd be interested to see what the top here looks like. So if we take a look at some of these, we've got Oklo selling, Vistra selling, Hallador Energy selling. What else do we have? They don't even put Carl Icahn selling Southwest Gas, which he does actually time these pretty well. So normally we avoid the 10% owners. I don't think they're super useful, but when you've got Carl, or not just that I don't think, but the data since 2009 shows that 10% owners aren't that useful, aren't particularly high signal. However, Carl Icahn's a little bit different because he's kind of like, a legendarily good investor, and you'll see he timed the purchase of Southwest Gas very well down here in the $50 range, and now that we're up around 80, he's like, yeah, that's good enough for me. I'm going to start selling off some at 80. So probably a little bit of signal there, but nothing too crazy for me. But if we look at some of these, like just some of the stock charts here, Oklo is up 1,200% in the last year, and you got a bunch of insider selling going on right here. Obviously, they tried selling back here too, and the stock went up another 100%. So hard to time these correctly, but a bunch of insiders selling up there. You've got Vistra Corp, which these are 10b5-1 sales, but as we'll see, the insiders, just a ton of insider selling. They similarly tried to sell during June, and the stock just continued up another $50, but we've got a bunch of insider selling going on there at Vistra Corp as well. Hallador Energy, just another similar situation. We've got this director now starting to try to sell the stock. They've actually been a little weaker here over the last 6 months, or over the last 5 months. They're pretty flat, and now we've got this director starting to sell the stock. And then all of these companies are also very expensive, just historically speaking, because they've run up so much because of the AI power demands that they're getting wildly expensive. It's going to be very hard to time when they're going to turn around, but all of these are going to get hit pretty hard. All of those AI adjacent ones, those ones that are up 100%, 1,000%, they're going to get hit pretty hard at some point. It's just trying to figure out when that is going to be a tough one, but the insiders are definitely flashing some warning signals. I guess in this case, they get to go under, equipment or something. Would they probably go under like industrials? I would guess. Let's take a look there. So yeah, they get to go under industrials, but these are actually Argon and NewScale are both similar. They are both still they're just equipment manufacturers for these energy companies, for these power companies. So both Argon and NewScale. Now Argon we took a look at, and they're actually just, the stock's up 160%, but that company, basically everything about that company is looking pretty strong. So probably wouldn't be my choice. The stock's going way up in the right direction, but then look at this, their earnings per share also going very nicely in the right direction. And if we look at they're going to be expensive expensive. So all of these guys are going to be way up here at these like 20, at these, not necessarily 20x, but at historically high valuation multiples. But if we were to read through, which we don't really need to do right now, but if we were to read through, you have earnings calls here. If you were to look through all of the numbers for somebody like Argon, it's like revenue is up 5%, 23% sequential growth, margin is improving 500 bips, gross profit is up 42%, net income is up 94%. Like, I mean, it's expensive and it's gone up a lot, but everything is going right for this company, which when you start to look at some of these other ones, it's not quite the same. So if you look at like Hallador Energy, also going way up, but then look at their earnings as flat, maybe slightly down. Stock's going way up. If we look historically at like the valuation, then you can see also all-time highs obviously here, not quite 20x, but 16x, which kind of for good reason, because this company's not doing as well. If we then go look at their transcript, they will try to say that these are just kind of one-off blips, right? They say, revenue is up 9% year over year, not nearly as good as Argon, but they were down sequentially. If you remember, Argon was up sequentially 33% or whatever it was. Hallador is down I guess they don't tell you how much, but they're down sequentially. Electric sales were flat year over year, but again, down sequentially. And then they'll say seasonality, and they had a unit outage that was planned ahead of time. So, and again, adjusted EBITDA improved year over year, but declined sequentially. So maybe that's true. And things get right back on track to growing pretty heavily here in the next couple quarters. But in this case, you can clearly see like the numbers aren't quite as friendly for Hallador Energy as they are for Argon. And then as you look through all these other ones, the NuScale and, NuScale, like we mentioned, what were the other ones that we just talked about? That we just took a look at: Hallador, NuScale, Argon. What else were they? Oklo, of course. Then, and Vistra Corp. So if we take a look at all of those, they're all going to be wildly expensive with, varying amounts of fundamentals and how well those fundamentals are going. But the insiders are certainly ringing some warning bells that like this is a pretty expensive industry that we're in. So I think that's an interesting place to look. Anything else interesting here we can just quickly look through? I mean, in this case, like you can see a 10% owner selling the stock, but this stock is going straight up, and not something I'm interested in trying to time when that's going to turn around. With stocks that are that strong, just a little too tough. And then we can see all these 10B51. We've got more CoreWeave selling. We've got some AutoZone. AutoZone's an interesting one because this one, I mean, like one of the strongest stocks of all time. But we did have the chairman of the board just sell executive chairman or whatever this guy calls himself, sold $100 million not too long ago, and this stock is also getting wildly expensive. However, this is one of those ones where like this stock just goes up for literally ever. Look at it. How far back can we get? All time, this stock is virtually straight up. I mean, just so little downturns ever. Even with, look at this. I mean, this stock's up 80% or whatever it is over the last 3 years, while earnings estimates are going down consistently, which means obviously if earnings are going down and price is going up, the price per earnings is going up, and this company, AutoZone, is wildly expensive. I mean, wild. This one would be a tough short just because this company just never seems to go down. Because they just eat up their shares. They buy back so many shares that this stock just never goes down. So it's a pretty tough one to try to short, but wildly expensive stuff, and not one I'd have any interest in trying to buy right now. So I think that's a pretty good place to put it. There are quite a few more interesting ones that we went through this week already that I don't really have time to go over. We looked at the gap and why that one's not, even though the insider is selling by a couple of insiders as we're closing in on earnings, could be interesting. I'd have some concerns about all the good news they have coming out, or all the good press and the good kind of alt numbers, social media numbers from their marketing campaigns right now would give me a little pause that, we might get stuck in like a Sydney Sweeney situation where they come out with earnings that crush it, like Sydney Sweeney with American Eagle. So we took a look there. What else do we have? There's some of the Vistra selling, more of the Vistra selling. HIMS, the insiders continue to sell HIMS in a healthcare space. Probably a stock I would stay away from. I think you've probably got better choices where you actually have insider buying at some of these healthcare companies. But overall, I think that's a pretty good place to end it. I mean, there's 472 insider sales, so we didn't get nearly through all of them, but you can go to CEOWatcher.com to find all the top insider trades for yourself. And don't forget to like and subscribe for the daily videos, and we'll see you next time.